So OPEC Plus plans yet another production hike. And our guest says it looks as though Saudi Arabia is switching its strategy from supporting oil prices to prioritizing market share, and that is particularly concerning if you are an oil bull betting on higher crude prices. We're joined by Waqar Syed, head of institutional research at ATB Capital Markets. Waqar, thanks very much for coming on the show.
Thank you, Andrew, for inviting me.
That's interesting. So the Saudis, of course, they think decades in advance, but market share is very important to them. And you think they may be shifting their strategy here?
Looks that way, Andrew. Back in 2020, Saudis came in. They reduced their production, and then in 2023, again, with help from 7 other OPEC Plus members, they initiated additional voluntary cuts to production. So since 2020, we've been assuming that Saudis are going to be like a backstop to keep Brent prices between $75 and $85 per barrel range. And so that has basically, that's what everybody has been focusing on and caring much less about supply and demand because, well, Saudis were always there to help us out. Now, they're getting a little bit frustrated with certain member countries that have been overproducing their quota. And recently, I think it's been Kazakhstan. And so I think finally they've decided to increase the quota above the change that they previously stated that the rate at which they'll be increasing the quotas. So they've boosted that. Saudis will increase their production levels, although others are already overproducing. So even though announcement on May 3rd was for quota to go up by about 411,000 barrels a day, the real impact on production is going to be much less, just because some of the member countries were already overproducing.
We hear that, and I think you know this, that the actual production increase may not be as big, may not be more than 400,000 barrels a day in June because some people are overproducing.
That is correct. That is correct. Kazakhstan, they're overproducing by about 400 to 500,000 barrels a day already. Now, a number of these member countries had already said that they would be even producing below their quotas to compensate for the overproduction they've done previously. And so we are not only not seeing that compensation, take place, but you still have countries like Kazakhstan overproducing. Now, one interesting comment, though, that the OPEC Plus press release that came out mentioned was that they see the oil markets to be healthy and that inventories are at low levels. So I think that it is a fact that inventories are at low levels. The crude oil inventory within OECD countries is about 5% below the 5-year average, and the oil liquids inventories are about 3% below the 5-year average. So there is a little bit of a run room for Saudis to negotiate while inventories are still below 5-year averages to create some discipline amongst the OPEC Plus member countries. So there is some room. It's not the same as before, where you would have like very large inventories, and then OPEC Plus was forced to react. Now it's they're being a little bit acting a little bit earlier.
What is your call on oil over the next year? And I know that's always an impossible question to answer, but we've got it very depressed, below $58 US for WTI. I mean, could we go down towards 50?
So, Andrew, I think the question is that now that OPEC Plus members have said we are not going to be the backstop, so it's going to be the market forces that will have to balance supply demand. And so the first signal is always going to be to the U.S. Short cycle drilling and completion activity to reduce their activity. And I think that signal is there at $55 to $60 per barrel. And I think the market can get balanced within that kind of range. Now, the exceptions would be if global oil demand weakens much further than what the current kind of view is the demand grows globally by about 400,000 barrels a day to 700,000 barrels a day. Now, if you go materially below that because the world goes into recession, then you may have to send a bigger signal to the short cycle and high cost production in the U.S. But right now, it feels to be in the where we are right now. It's probably a reasonable range where the market could be balanced. The other thing to focus on is on the supply side is what happens with Iran. Now, if we go into this maximum sanctions regime for Iran, and another 500, 600,000 barrels a day of oil production comes out of the market, that can solve a lot of problems. On the other hand, if there is some kind of an agreement and sanctions regime is removed from Iran, you could have another 400,000 barrels a day additional come into the market. That can weaken the market more. So there are still a lot of unknowns into the marketplace. But based on what we know, I think we are in the range where market can get balanced right now.
You have a chart in your report showing that OECD inventories, you've touched on this already, Waqar, OECD oil stockpiles have been declining.
Right. And I think that has been a very smart move by OPEC plus member countries, that they will keep inventories below the 5-year averages. So that gives them some time to react. Because once you have inventories at bloated levels, then it takes a lot more effort. It takes a lot lower oil prices to improve the market. Mm-hmm. So right now, from a physical inventory perspective, we are actually at healthy levels. And that has been a deliberate policy of OPEC and OPEC plus members.
I'm just trying to think, I mean, the U.S. shale, we hear that executives there are saying, no, we don't plan a massive increase in production. But Canada, Guyana, we are expecting more oil from those countries.
Absolutely. So, there is the short cycle production, which is U.S. shale. And then there are the longer cycle projects that are in Guyana or Brazil or, especially offshore. And then, Canada has its own dynamics with some excess capacity egress that you have right now. Plus, sometimes the differentials versus WTI and the exchange rate can benefit the Canadian producers as well. But yeah, you're right that the U.S. Major producers do not really want to grow. And if you look at the February monthly production number that was just released a couple of days ago by EIA, it showed that year-over-year oil production only grew by about 50,000 barrels a day. Mm-hmm. The problem on the U.S. shale side still is NGL, the liquids production that comes in, and that is still up, about 300,000 barrels a day year-over-year. So we think that, you could have maybe production grow 200, 300,000 barrels a day year over year, or maybe even less than that. If oil stays at around $58 to $60 a barrel, you may actually see relatively flat to even declining U.S. production year over year.
We'd better, John. Thank you very much indeed for joining us today, Waqar.
Thank you very much. Pleasure to be here.
Waqar Syed, Head of Institutional Research at ATB Capital Markets.